Are stocks overall a good bet right now? Yes or no?
Overall, stocks are not a good bet, especially if you have a long-term view. It's hard to know what's going to happen in the short run. But the real risk here, given the consensus is very bullish, is that actually we have some strong employment numbers over the next couple of months. And then the Fed decides to pull the punch bowl away, stops buying bonds as much as they have been. And then people start worrying about whether the Fed is going to increase short-term interest rates.
Yeah, I mean, you heard the warning at the top of the show. I mean, that's basically as, I mean, the Fed speak, if you can decipher it, Chuck, I mean, you know, they use basically the most boring language possible. But what they're basically saying is if people decide they don't want to invest anymore, stocks could be, and I'm paraphrasing, in for a sharp correction. Sounds like you might agree with the Fed.
Well, and you know, the Fed report is a report that comes out semi-annually, so they're not trying to make short-term calls in the market, and we don't try to make short-term calls in the market. It comes down to historically, when you have this kind of valuation, and you look at especially forward-looking PEs, you tend to have relatively close to zero returns over the next 5 years, and so that doesn't mean that there won't be stocks that will give relative returns, but it really will be a market of stocks instead of a stock market.
You think we're going to, if we just bought like an S&P index fund, do you think our returns are going to be flat the next 5 years, Chuck?
Yeah, I mean, it's going to be volatile, obviously, but it's certainly going to be much less than we have experienced over the past 5 years. And maybe after this year, the years of double-digit returns, especially consecutive ones, are over. And again, and we're already starting to see the signs that might be happening because of the rotation in the market. Again, it's not that no stocks are going up. It's just that we're changing leadership.
Okay, and where is that leadership going to? I can tell you where it's from. We all know where leadership has been, and that has been the big technology names. That's a surprise to exactly zero of our viewers. But where might some of that money be going? We want to know where the puck is going, Chuck, not where the puck has been.
I'm a big hockey fan, so thank you for quoting Gretzky. But the puck has already moved towards the value stocks, especially stocks like financial and energy have done well over the past 6 months or so. And we think this is just the beginning of that increase in prices of value versus growth. Again, when you look at valuations of value stocks versus growth stocks, and looking at the forward PEs, value stocks are still very cheap. And so it's not too late to get on the value train. And we think that investors should be buying more and more value stocks and be lightening up on their growth stocks.
You think energy, when you say energy, do you mean oil and gas?
Yeah. Energy is going to still be around. Obviously, fossil fuel energy is still going to be around. And the good news about fossil fuel energy companies is that, for the most part, their balance sheets are quite strong. And because of that, if there is some volatility in the economy, let's just say, for instance, that the economy is only going up mainly because of the stimulus checks, they still will be able to deal with that and be able to be profitable. Many of these companies have had tremendous earnings growth, and the long-term trend is still going to be there. Yes, we believe in clean energy stocks. We own some clean energy funds, but I would not count out the fossil fuel companies.
Shepard Smith here. Thanks for watching CNBC on YouTube.